The U.S. dollar is higher ahead of the U.S. CPI data, which will be released at 8:30. Yes, there will be data coming out this morning in the U.S. The CPI is expected to rise by 0.4% for the headline, 0.3% for the core measure. Both of those, the year-on-year measures, are supposed to both come in at 3.1%. That's well above the 2% target that the Federal Reserve is targeting. And a concern as a result of the uptick in inflation is as a result of the tariffs. So we'll see how all that pans out as far as the price action goes. Will they ignore it? What will the Fed do? What will the Fed say? The Fed meets next week. We'll deal with that next week. But anyway, in this video, I'll take a look at three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. So let's get started. When you have key economic releases, there is a chance for sharp moves to the upside or downside. So understand that risk going into this data at 8:30. When I look at the euro versus US dollar, I'm looking at the hourly chart, and the market has settled itself right near the 100 and 200 hour moving averages. Are we surprised? No, that's a sort of a neutral area, an area where the market can either skyrocket or move to the downside. And so when you look at this type of a formation, you start to look at the targets one way or the other. So if the let's say the euro, the data is more is higher than expected, you expect the dollar to move higher, the euro versus US dollar to move lower, and the next key target to get to and through would be this swing area right through here. If it gets through that level, that would open the door for further selling pressure with the double bottom that we saw in trading over the last few weeks as the next key target at 1.15413. So the first target to get through would be the low of the swing area at 1.15816. You might include the low price that we saw 2 days ago, that where the market went below that level and quickly rebounded, but as the target to get through, so a little bit below that level. But the point is once you move below this level now becomes resistance, and traders would then use that level as a risk defining level. Put your stop above the 116 level, for instance, and look for further selling pressure. The next target would be the low prices at double bottoms right through here at 1.15413, and then if you get below that level, then you start to look toward this other swing area, which is down here between 1.1518 and 1.1529. And if you go back in time and just follow this area right through here, you can see where it had support and resistance there, but it goes back in time as well to this period right through here. So that would be the next key target on the downside, and get below that level. And it really opens the door for this type of area down through here where there's lots of room to roam on the downside. So be aware of that. On the top side, if the number does come out weaker than expected, or we get a failure on the downside and a snapback rally, getting back above the 100 and 200 hour moving averages, open the door toward the 100-day moving average. That's this blue line in this chart. Level also happens to correspond with this swing area high through here, where this was a floor, and then became a ceiling through here, floor, and ceiling through here. So it's acted really nicely as either floor or ceiling all through this area right through here. So get above that 100-day moving average, and the price should go higher. It makes this level the risk level. Getting above that level, now it starts to look toward the 38.2% retracement of this move to the downside, and get above that level, and it opens the door for a rotation toward the 50%, which happened to be the high price that we paused at last week on the top side at 1.17297. So understanding the roadmap of where we're going and using those levels as your risk defining levels is what you want to do as a trader. So be aware, be prepared, know the roadmap. Let's take a look at the dollar versus yen next. And if we take a look at this currency pair, it's been trending to the upside fairly regularly and trading since bottoming last week. Put a trend line right across there. You can see the trend. And then the low price today came down to the trend line and found support buyers and pushed to the upside. If I were to move this line up here, around here, 152.73, which happened to be this low price right here, would be a level that if we broke below that level, it would open the door for further selling. Then we start to look toward this level, 152.13, and below that, the rising 100-hour moving average. So the progression would be get below the trend line, move down toward this swing area right through here, and then move down through the 100-hour moving average, the 200-hour moving average. That's on a weaker CPI data on the top side. We don't have far to move to get to the high price that we saw in the month of October. That level came in at 153.269. If I were to go to the daily chart, what does that look like? That's this level right here, which happened to be just below the 61.8% retracement of the trading range. Well, going back to the 2024 high to the 2024 low. So the range over the last year and a half of is the 61.8 comes in at 153.39, open move above that level, and there's really not a lot until 154.73 in the dollar versus yen. So understand the high price right here, the 61.8% retracement, and move above that level opens the door for further upside for dollar versus yen. Finally, let's take a look at the sterling versus US dollar, and this currency pair is breaking or making a move below the low price that we saw earlier this week. Yesterday we came down to test that level only to find willing buyers against the area ahead of it by about 4 or 5 pips. You can see that the price is trying to get below that level, which comes in at 1.33049. So the dollar is moving higher and also moving away from the 100 and 200 hour moving averages up here. Those moving averages would be targets on further upside momentum off of a weaker CPI data, for instance. Ahead of that would be to get above the 1.3341 level, which is the high of this swing area. You can see the swing area was initially resistance through here and then became support through here and here and here. This is a nice floor where the price found support buyers all through here before breaking to the downside and trading above and below that level back here and even through the trading this week. So getting above 1.3341 and would then target the 100-hour moving average, 200-hour moving average on a stronger number, higher inflation reading. We just have the low prices that we saw in the month of October, which come down to 1.3259 and then 1.3247 as the next key targets, followed by the 200-day moving average. That would be the progression, the roadmap for you as a trader. So be aware, be prepared. That's my look at the 3 major currency pairs ahead of that CPI data. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.